Mindtree is a middling tech company. It was started by a group of former Wipro executives almost 2 decades back. It had internally set a revenue target of reaching $1 billion by 2012. But it has missed that twice, and it's likely to achieve only this fiscal. But what is interesting is, of late, it has aggressively transitioned to digital revenues, almost half in the third quarter of FY19, by leveraging its exposure to large technology customers like Microsoft and its background in product engineering. So that's what makes it an interesting target for any IT or tech player who's looking to consolidate. Most analysts on the street feel that revenues of Mindtree will actually grow faster than the industry average due to lower drag from legacy revenues. The operating margins too have recovered from the lows of FY 17-18, and mostly most see potential for medium-term stability, as segments like financial services have scope for improvement. Now, these are segments where Mindtree is strong, with clients like AIG offsetting any adverse currency moves, which is always a drag for tech companies which thrive a lot on export incomes or dollar income from clients. Mindtree is a widely held company. Almost 86% of the company's equity base is held by public shareholders like FIIs, mutual funds, insurance companies, retail investors like you and me. The founders or the founder promoters only own 13%. Now, the single largest shareholder, that's Mr. V.G. Siddharth, founder of Cafe Coffee Day. He was literally the quasi-promoter with a 20.4% stake. He has been involved with this company right from inception. In fact, when Mindtree started out way back in the late 90s, they used a office space which was given on rental by Siddharth. He's not just an angel investor, he's literally a silent partner. Passive, never interfering, but always a solid backer. Siddharth needed an exit because he was having his own liquidity pressure. He was highly levered. He had taken loans for his various group companies like which are into logistics, which are into coffee chains. So he wanted an exit. He approached L&T whether they would be keen to buy. L&T was keen to buy. The management, however, resisted, saying that L&T's ethos is very different from theirs, so which is why it's literally become a war of words, and that's why the hullabaloo. Now, L&T is a diversified conglomerate. The lion's share of its revenues come from the EPC, which is the construction business, but that is highly cyclical. Only when there is a momentum in the economy, when people are building industry parks or building offices or building factories, or when there is enough infrastructure spending on roads, highways, bridges, do they really enjoy a windfall. But to offset this cyclicality, L&T has been strategically growing its services piece, which is largely technology, real estate, and financial services. It has been looking at acquisitions. L&T Infotech has made several small niche acquisitions. 5 to 6 years ago, we are told that Mindtree, some of the founders came to L&T with an offer to buy them out. At that point in time, L&T relented. This time, when they saw the opportunity, in fact, Siddharth himself had approached them through mediators, they were convinced that this would be an interesting strategic fit. Now, a deal, a merger or, combining the forces of Mindtree and L&T would create a 2.4 billion IT services firm with 4 verticals of reasonable scale. You would have a significant BFSI or the financial services business, which could be clocking around $870 million of revenue with key clients like Citi, Barclays, AIG. There would be a significant retail piece, which is around 590 odd million. Then there's a manufacturing vertical and the technology, media and services business with clients as diverse as Microsoft, Avis and Marriott. The combined entity will also bring down client concentration significantly, with no single client accounting for greater than 8.5% of revenues. If you have a diversified client pool, if you have a diversified sector approach in an industry where scale matters, this would be a win-win for both, provided, of course, L&T's acquisition or its offer is accepted by shareholders and there is no internal rebellion of sorts. Mindtree's founders have reacted violently. Now, rather hostile takeovers in India are not that common. We have seen a few, but certainly not in the IT space. Now, the founders have actually gone on social media. They have had press. There was a press conference yesterday. They have publicly stated that they are opposed to this transaction. They think it's hostile. L&T is coming at them with their bulldozers. This is to quote Subroto Bagchi, who is one of the founders, who in fact resigned from a government assignment in the state of Orissa, as a mark of protest. There were, hashtags called Mindtree Matters all over Twitter for the last 48 odd hours, where lots of people, including employees, are saying that, Mindtree is built on a different culture, value system and ethos. Now, L&T or an acquisition by L&T would potentially, damage that, which is why they're dead opposed. So there is a lot of uncertainty, especially in the talent pool, because at the end of the day, IT is what? It's all about people business. It's all about techies. And now if the techies leave, then what are you left with? This is not a steel or a manufacturing driven company where, systems and processes matter. Here, it's a services industry where people matter and they are the principal currency of a company. So it's very, very important to retain talent, which is why L&T too has been, for the last 24 hours, up the ante in terms of outreach, trying to pacify or soothe nerves, not just of the founders, but also employees, clients of the company. Let's look at the numbers. This is a publicly held company. Minority shareholders will play a significant role in, to see which way the pendulum swings. The founders have only 13%. They've tried to launch a buyback. In fact, today there is a board meeting which is to consider the buyback proposal. Now, there are certain rules and regulations that govern a buyback in this country. You can only do a buyback of up to 25% of your net worth. Now, that translates to, the promoters, if successful, buying back around 3 to 4% more from public shareholders. That won't cut it or move the needle. Their price is 1,000 rupees a share versus L&T's open offer. L&T is buying 20.4% from Siddharth. Then they've asked their two corporate brokers, which is Axis and Citi, to shore up 15% from other shareholders. So 20 plus 15 is 35. And then they are also launching an open offer for an additional 26%. So total 66% is what they're trying to garner from the open offer. Their price is 980 rupees a share. Now, mind you, two things can't happen simultaneously. Once you've said that you're going to launch an open offer, the buyback, which is a counter from Mindtree, can happen only after the open offer window closes. So, open offer happens first. If it's successful, then it's slam dunk. If shareholders do tender or accept open offer and tender their shares, then game's up. L&T pretty much would own the company. The buyback, would be null and void. A lot of outreach from both parties, trying to convince shareholders why their side of the story is more compelling compared to the other. Yes, emotions are high. Of course, there's going to be emotion because these are founders who started a company. It's their baby. Emotions are understandable, but at the end of the day, people will also have to take notice of what the minority shareholders want. If the minority shareholders want to go with L&T, if they think that's a compelling story, they will go with them. And L&T will be the owner of Mindtree. Expect firework, but hopefully at the end of the day, it's going to be what the minority shareholders think is best for the company.